Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. Mid-Session Brief. Today, we're trading the NFP Fallout. We've got a lot planned here. Market good. Welcome back. Is anybody tired of trading yet for this week? It would be very rare that I would have orders down in the market at this time of day on a Friday. It would take an NFP day to get this done. We got just an absolute huge level in play for WTI crude oil right here. You've got 75.20. It's been an amazing scalp. So I've got the ATM machine out. I've got the live DOM up. I'm going to show you where my orders are. Remember, white DOM's real money. The black DOM or the dark DOM, the TradingView DOM's demo. And this right here is what we're looking at. We're looking to sell right up here in front of 50. I've got a range number up there, but I would be surprised if this market breaks above that 20 threshold. I've been scalping that one repeatedly all day long. It's turned into a pretty darn good day. This area right up in here, this is that monthly 62% retracement on that November contract, November WTI contract. So we're going to rock a 3-lot from up there if we can get it. The ideal scenario for me, and this is going to be a quick scalp. I mean, we're going to have to pay attention and make sure that if, in fact, we do get an opportunity to sell up there, I'm in and I'm out. We're not marrying this thing. We're in and we're out, and that is it. I'm looking for probably 5 ticks. I'm rocking a 3-lot, so I'm going to take one off relatively quickly, and then I'm going to look to get involved with the other 2, maybe potentially put a runner on and sort of show you how that kind of trade's executed. So in a perfect scenario, I'm going to show you one of my filters right now. That's my range number. That's secret sauce. So they can't have that. But this down in here, these bars here are what's called an ADR, an average daily range. Well, it's more of an average periodic range. It should be called an APR. I use a 13-period APR to give me an average range on the upcoming bar. So our price bars are running somewhere in the neighborhood of 53 ticks. That's what my 13-period average tells me. So from 53 ticks, I can sort of assume, or I at least have to game plan. I say, okay, my low on this price bar thus far, 30-minute chart, is 75.07. 75.07 plus 53 is what? 60. So when my sell right in here is 50, I've got it shaded down to 45. Is my entry good enough to make a little bit of money here? I think it is. This level right here, you're going to see a pretty good breakout. We're going to let this one play against us a little bit. I'm not afraid to let this thing go maybe up to 53 or 54. But what we can't do is we can't get caught in a late day trend up, which definitely could happen given the geopolitical activity going on. So full disclosure, I've got my orders in right there. We're going to give this a shot right in front of 50, and I've got my stop loss up there. Now my stop loss, there's no way I'm going to let that thing bleed against me to 63, but I've got to have something in the queue way up there just in case if we get a 1-minute bar like we got yesterday, I'm out and I'm not going to lose thousands and thousands of dollars. Absolutely imperative that we understand that. So for me, right now, this trade's shaping up to be okay. I would love to see this market trade back down to right around 75, maybe even 74.95. That would be beautiful before we head up, but it looks to me like we're heading up right now, so we may be involved very soon. I'm not going to waste any time. As soon as we get in, I'm going to be watching this baby on a 1-minute chart. As soon as I'm elected, I am going to look to get out my first target. I'm looking to exit the first contract at 5 ticks, and then the second one I'm going to be judgment calling it on. I'm going to be looking at 8 or 10 ticks, depends on the velocity. And the third one, I'm going to move my stop to break even and let it run. And that's going to be the idea of maybe calling the top of this market. An extremely difficult thing to do. I wouldn't even consider it unless we had a range number that fell right on a key number, 75.50. And also this time of day is absolutely ideal for playing rotational crude oil just because you don't typically get a move. Okay, here comes the market. It's coming right to us. Are we going to get an opportunity to trade it right there? What's our high? Our high on the day is 28. We're flirting with that. It looks like we're going to take that out. We've established trade above that key level on the monthly, which is 75.20. And now we're rallying. So remember, our orders are right here, 45. I'm looking for a bit of compression before 50. If this market just blows past 50, we're going to rip the Band-Aid off and we're going to get out. I'm not going to waste time with this thing because I've got another sell entry, another real strong sell entry up here at 75.95 that I would absolutely love to hit just in case this thing turns into a trend day up. Thus far, we're up about 2%. I don't believe for the U.S. session, it's been very slow trading, and it's something that I'm not really interested in playing a huge breakout to the top side. If I wanted to buy this market, I could buy from my key level as well. So something to think about there. So definitely we're going to keep an eye on this market. I'm going to leave it open for just a few more seconds because I got a feeling we could get that big bump, and I got to be real. I got to be fat. I got to be quick on the trigger, and I would like to show you guys how this is done in real time, even if we do take a loss. Okay, here we go. Game on. You can sort of feel that we're rallying. 45, I want to get out of that first one here. I want to get out. I want to rack that first profitability. Now, what we're looking for is compression right in front of 50. If we don't get it, we're going to get out fast. We're not going to let this thing bid against us. There's no way we're getting caught in a breakout topside unless it comes completely out of left field. Right here, this 1 minute bar's overextended. I want it right now. Give it to me right now. Give me the sell right now at 45. If I can get it right now, I got a lot of confidence we're going to take the money very quickly. 45, 45, 45. Can we get it right this minute? Nope. Now we got a new 1 minute bar coming on. Okay, we're probably going to get eaten up right here. Let's wait and see what happens. 45. Let's print it. Okay, there's 45. Did we get it? Did we get filled? No fill yet. No fill yet. All right, there we are. Boom. First one I want out of 40. Now we're going right up to 50. That right there is where we got to dig in and see some exhaustion. If we don't see it, we've got to rip it off. We've got to rip the Band-Aid off here relatively soon. I want to sit for a minute. I got to give this thing a chance to work. That's a pretty good range number. We got to let 50 work a little bit. It's against us. Right now, we're in the hole. We're in the hole, about 180. Right now, it's huge. This is a big time. This is a big time for this trade. It's either that or we're going to get swept out. If we get swept out, it's okay. We've got a stop loss down up there. But right this minute, I want to see some exhaustion right around 50. If I don't get it in the next 10 seconds, I've got to think about getting out. Okay, there's some exhaustion right there. There's a bit of our sell. Can we get some continuation up under 45? Can we get this market to come back down our way? Can we get it? Can we get it right there? 44, 43. Can we get a print? Can we get a print? Can we get a print? Okay, right there. That's 40. That's our first profit target. I want more on this. I've already risked more. I want more on this. All right, bang, the market's going against us. Can we get the sell-off? Can we get the big sell-off? This is what we're looking for. This is what trading's all about right here. All right, out. I'm out of one. I got one left on the market. Boom, I'm out. I'm scratching it. I cannot sit in this market and let it go against me. We're clearly trending. Can I get out with a little bit of money? Yes or no? I'm out. I'm not interested in sticking around. That's trading. That's scalping. Now, a lot of people are going to sit here and go, Shane, you should have stuck to that trade. You should have went with it. Well, where was I at for the day? I was up about $200 going into that trade. My 45 wasn't necessarily the best entry, but I liked it. I liked my 50. I got out of there probably with about $80 of profit, somewhere in there, so I covered my commissions, and I was also able to make a little bit of cash. Now, did I get out too early? Yeah, I got out too early. If I held it right there, now we're hitting our profit targets. Now we're eating it up. Now we're making a stack of cash. Oh, well. I was up pretty big on the day. I had the opportunity to take the trade. I took it. Was it a great trade? Took an initial draw of about, 10 ticks. Got out at 5, just basically cut our losses. Could have executed it better, but not necessarily the worst trade in the world. So I want to start off with a live trade. That was a real money trade. We came out of it, it looks like about, $70 plus 70. We took a draw of 12 ticks. So it wasn't the best. But it's, the range numbers work. They don't lie. I mean, look at, you're coming right back down. So pretty good stuff there. I wanted to start off with a live trade. If we could trade some live money, I always like to do that because I find it to be, exhilarating. I wanted to get in there and get a trade done for you guys. I've been saying I was going to do it all week. I get a lot of questions. That was a real money trade. A lot of pressure on you when you're staring down the barrel of a trend. You got to make decisions and you got to make them fast. That was a pretty good trade. I should still be in it, but that's okay. That's okay. There's nothing wrong with that. It's Friday. There's no way that I was giving back a week's worth of work just in case we got caught up in maybe some real messy rigmarole. But that number is going to work pretty well. Okay, guys, we got to do a trade follow-up. I issued a trade idea just a little while ago, and then we're going to dive into our NFP analysis. The silver markets have been on absolute fire. They've been on absolute fire. And basically, my premise is I want to get long any way that I can. Any way that I can, I want to get long. And I think we got a pretty good area. Specifically, ESA, do I trade gold? Yeah, we're going to get to gold in just a second. What we want to do here with silver is buy a pullback. Now, on a 4-hour chart, I worked my Fibonacci's on the dailies, the weeklies, all that jazz. There's no levels really within range, but this 4-hour level is interesting. If you're a smart money concept trader, if you have the ability to, spot or, order blocks and all that jazz, if that's what you want to do, market structure. For me, I take a good look here and I say, okay, what do I got down here? I got some order blocks. Is that really an order block? To me, it is. It's just basically a series of swing lows that all sort of reside right around 31. To me, that's absolutely huge. I want to buy a pullback down in this area. I think that's pretty darn good support, as you can see on the 4-hour. We had that one made down on Monday. That's Monday's low there. And then there's Tuesday's low. So right down in that zone, there has been bidders. Now, why are there bidders there? Because there's 31. Big round number. We're not going to try to reinvent the wheel. So check out the trade idea today. It's about 31.25 is going to be your bid. This is going to be more of probably turn into a swing trade, but I think that's got a very good possibility of coming our way just because look at that big crazy candle on NFP. So now we're coming off a little bit. I think that we're going to have a pretty good opportunity there to step up and buy something and trade it. As far as what we see in the gold markets, right here, gold futures. To full disclosure, I had a moving average down there. We were on earlier today, so I didn't get that trade. That was a great trade. That bid down from there. But as far as what can we expect out of maybe the spot gold market? Well, 30-minute chart. Gold's been a bit of a challenge today. It really has been. We saw the big epic rally, and it looked like we were going to go to all-time highs. And then we sort of saw the retracement now. I love where gold's trading right now. I'm still in the boat completely from 26.05. No question about it. If I wanted to go long, that's where I would go long. Say, Shane, where's your best long entry? I would say right down there, 26.05, maybe 26.0750. Not necessarily a bad trade, but what we want to do here is understand the game. And we need to understand that maybe that isn't going to come our way anytime soon. So I would be focused on this daily chart as well. You can see right there, we got the bid in spot gold earlier today. I had this one outlined as well, 26.32. That's a pretty darn good support level as well. Be ready for this market to break, though. We've got a daily moving average right there, 26.30. We've got 38% at 26.32. If we break, I think we'll get a shot at 26. CPI next week is the big event. We don't know how the markets are going to digest this NFP coming into Monday's open. I think it's going to be an extremely fascinating trading day. Can't wait. Absolutely can't wait. So interesting stuff there on the gold market for me. This type of formation right there, doji, sort of a doji and like a hammer, or back-to-back hammers, whatever you want to call it. And now we've got today's range trades, both sides of those. What do you have? That's that megaphone formation where we're going from small to large in the process of price discovery. That's backwards. Typically, we go from large to small. Something to think about there. In any case, I'm watching this relatively closely. I think we got a good chance to get another bid. If you wanted to bid 26.35s down there or something today, you could. I think it's going to be just fine. But I want this one down here. I want 26.05, somewhere in there to maybe make a position trade for next week. Any excuse for me to buy gold right now, and I'm in. I mean, it's that simple. So a lot going on, though, in the markets today. This is interesting right here. Trade follow-up. We went through that. But what is really interesting is what happened today. Week 40, U.S. non-farm payrolls. Absolutely huge event. If you didn't get an opportunity to trade it, head on over to Switch Markets, get your 100% credit bonus. They'll beef up your purchasing power, and you'll have a chance to trade it. So when we went over this during the pre-market, but I'm going to go over it very, very quickly. How does NFP impact it? Okay, a low NFP is bearish. That's not what we saw today. We saw a high NFP. That's bullish for the U.S. dollar. So the U.S. dollar is up about 0.63%. That's the dollar index. Now, typically, when we get into that matrix, what does that mean for your stocks and everything? It means they come down. Well, that hasn't happened today. And also commodities. There should be some bearish pressure on commodities. Gold futures are down about 0.5%, but you saw silver still up. WTI crude oil still up. That's because of the right now of the Israel-Iran situation, and also Russian escalation as well. So geopolitics trumps NFP when it comes to U.S. oil, but gold, silver, those are trading mixed right now. It's all over the board. It's been a rotational session. There's no question about it. It's been a rotational session. All right, so NFP's in. I mean, here's what we had earlier. We already went over all the numbers. The biggest thing there was your huge print in non-farm payrolls and the revisions. I covered the revisions earlier today. They were unbelievable. Unemployment ticked down by 4.1%. That was absolutely huge. And you can see right here, the U.S. economy added 254,000 jobs in September, much higher than an upwardly revised 159 in August, and well above forecasts of 140,000. It is the strongest job growth in 6 months and higher than the average monthly gain of 203,000 over the prior 12 months. Employment continued to trend up in food services and drinking places. So everybody's hitting the restaurants and drinking. That means your credit cards aren't full just yet. So this is interesting to me. Really a huge print. You can see right there. There's that epic September print. After what had really been a doldrums, we figured we were going into a recession, and now you've got that big-time print there in NFP. Now, your unemployment rate, is it up or down? It came down to 4.1%, but you'll see this is the historic chart I went over yesterday. We're still very low historically. We're still very low. Even if you throw out all these peaks, which typically coincided with economic panic in these troughs, you're very near a trough. You're not very near a peak. Interesting stuff on your unemployment numbers. Now, the other question that we have is, is it real? Are the unemployment numbers real? That I don't know. Well, I do know. I think it's an election year, and I think they're fake. I think that they're not necessarily fake. They're just being reported in a positive light. How's that? It's not necessarily that they're making them up out of thin air, but we also knew that the markets weren't going to buy this. They weren't going to buy it. I talked about it during the NFP live stream. Go back, check it out if you want. But look at this. 9 EMA strategy, okay? 9 EMA strategy. We were right here. We talked about this right on this break, all right on NFP's break. Boom, big break. I said you could buy in right there. If you did that, you rode the train all the way up. And then what happened? Started getting close to the U.S. Open. Look at what happens when you get the first negative 1-minute candle trade beneath that 9 EMA. I hope you got out if you were long, and I hope you went short, because that was essentially the top of the market today. You could say, well, that you sort of cherry picked that. Go back and check out our live chat. I showed you exactly when that was happening. I put the trade on just on demo, did some demo bucks, but you could see, that's exactly what we're talking about. Right there, bearish close beneath the candle, beneath the 9 EMA. You've got a stop loss up there above the swing high, which is the high of the day, and you're just locking in shorts and taking as much money as you wanted to, a 1-to-1, 1-to-3, 1-to-4, 1-to-5, whatever. And that's exactly what you had. Now, look where we're at. Now we're sort of rallying back. Could we have just taken this short and then maybe got long? Well, you could have got long right there and got smacked. To me, it was relatively a simple read. Just take your 1-to-2s, take the money and get out. Stop loss is beautiful. It's above the intraday New York high. You can't really ask for anything better than that. So for a 9 EMA 1-minute trade, that was fire. We pointed that out in real time. So go back, check out the earlier live stream if you did miss it. So what does all this mean? It means that the politicians are out front. They're spiking the football. They're getting ready to, say that their policies are the absolute bee's knees, or they're the best. Well, this is what you got from the White House. Statement from President Joe Biden on the jobs report. Today we received good news. We are growing faster than expected. Under my administration, unemployment has been the lowest in 50 years, which is a complete fabrication. It was lower before COVID. So what do we got right here? You've got where are the jobs? Where are the jobs? Look at mortgage rates spiked. There's a lot going on today. That NFP set off a chain reaction. Here's where the jobs are for September in 2024. Jobs came in surprisingly strong. So where are they at? Well, right there, leisure and hospitality leading the way. That's good to see. I mean, the hospitality, that's your hotels, your restaurants, your bars, all that stuff. Healthcare and social assistance, 71.7 thousand. Those are typically related very closely to government stipends. Hospitals, my wife works at a hospital. She understands exactly how the federal government sort of delegates funds to hospitals to keep them running, depending on your area, depending on what your specialty is. So when you start talking about healthcare and social assistance, a lot of those are directly due to government spending. Now, government, those are just people that work for the government, probably a lot of IRS workers, 31,000. Construction, that's a little bit different. Construction's up. Why do you think construction would be up 25,000? Because of those rate cuts. Just a little dip in a cost of capital, and all of a sudden a lot of projects come online. People go back to work in a big way. So right there, that's a major gain in the construction industry, especially going into the fall here in the Northern Hemisphere. Professional and business services, 17,000. That's also a solid number. It's not a bad one at all. Retail trade, not bad at 15.6. So we look at all this stuff. Where did we shrink, though? Manufacturing, negative 7K. The manufacturing industry in the United States is pretty much the backbone of any political campaign. That's who's catered to. That's who the voters, that's who the politicians really want to vote for them. Manufacturing is in contraction. That's your car industry. That's any sort of production of hard goods. That's a problem. That's a real problem, and it's a big-time contraction. Transportation and warehousing is also on the downtick as well. So as good as, these numbers at the top may look, I don't want to throw rocks at a glass house, but I'll tell you what, this number is very, very shaky, and I believe fully that it's going to be revised down by the end of the year in a big way. I just don't believe it. So in any case, the markets didn't believe it either. They didn't. They came right back down off of those highs. But what happened to our key interest rate expectations? For November, we now have a 95.3% chance of only a quarter-point rate cut, and you've got a 4.7% chance that they're going to hold rates stable and static. That's new. We were just looking at a half-point rate cut not too long ago. How about for January 29th, 2025, the first Fed meeting of 2025, 69.4%, says it's about 4.25%. So we're still expecting to come down with a couple rate cuts. The real question is the Fed going to pause after this huge NFP number? I don't know. I think it depends on if they believe it or not. So what does all this mean? It means that you could be in fact looking at a hawkish U.S. dollar. And a hawkish U.S. dollar is going to bring your majors down. Great Britain pound USD, you're going to bring that down, and you're going to get that compression and then a big-time rally. So this Great Britain pound USD, you can see we're just eating into that NFP range. We talked a lot about that. Really seems to be the effect when it comes down to trading these huge economic events. You get a big range established, and then what happens? We end up pricing away the rest of the gains as the session goes on. It's exactly what's happened today. Spike high, spike low. Very simple, 132.09. I think that's your sell. How much would I be looking for? 25 to 50 pips, somewhere in there. I think you could easily get that. We're going to fill this in. I think we're going to get a crack at that early next week in that Great Britain pound USD. Love my dailies. Absolutely love my dailies. Now, if I wanted to sell more aggressively, could I? Well, I mean, you could. I just really don't see the reason for that. Don't see the reason for that at all. Why? Because we're moseying north. We're heading north, filling in NFP. You don't need to force it right now. Wait for that big move. You'll get it. 132.09. You'll get it. You'll get it. You'll get it. All right, let's get back down to brass tacks here. What do we have developing? Do we have another trade on the horizon? You'll notice that upper range line, gold. It's absolutely fantastic. So I bailed on that one too quick. That's okay. Like I said, your situation is going to dictate everything you do in the markets. I was in a pretty good position going into a late day trade today. Made some money this morning. I'm up. I think my final tally. I think I'm up about $270 on the day. That's not bad. It's been a nice week. The last thing I want to do is get absolutely torched on this trade. So we took a bit of a breakout draw, but you got to give these trades at least a minute or so to set up. It's set up beautifully. At that point, I probably should have just stuck it out and waited to get paid off. But you know what? That's life. Now my next entry, I don't want 50 anymore. This area is getting saturated. It looks to me like we're going to push higher. My next sale is right up there in front of 76, and that'll be a big one. That'll be a big one. So with about an hour left in the WTI session, I think we're going to get it. I really do. I think this market's headed higher, and the institutions are going home long for the weekend. So that's definitely on the. I don't know what happened there. In any case, that's definitely on the books for later. As far as the rest of the markets go, the Great Britain pound USD, that's a pretty good Forex opportunity. Now, as far as this 1 minute strategy, we're going to go ahead and put a pin in that and revisit that next week. Dollar yen, we had some players that were up dollar yen today. Take a look at this 1 minute on the dollar yen. I mean, if you want to take trades like this, you certainly can. I mean, remember, the number one problem with trading a 9 EMA or any type of EMA strategy is when the market flattens out and it doesn't trend, you get chopped to death. And when you get chopped to death, you lose and you lose and you lose and you lose until you want to quit. But if you know there's a day with a big market driver or something and you want to buy, you certainly could. This is a good example of an absolutely huge candle. Your risk is going to be epic if you buy in right there. But did it pay you off? Not really. Not yet, at least. But you could be looking at something like this. Maybe a pullback buy is the way to do it. Maybe expand your horizons, expand your time frame a little bit. Not to a 3 minute. I don't know anybody that trades a 3 minute, but if you're making money doing it, it's the right answer. Something like this, 5 minute chart. Could we have got a pullback there? Could have. Are you making more money? There's your initial entry. What if you waited for a pullback test of that 9 EMA and sort of bought in there? Could be good. If you tried selling down in there, you got torched, but your stop loss wasn't that big, so it wasn't the end of the world. As far as what I'd be looking at for the dollar yen going into, say, next week, Let's go ahead and take a look. Interesting. Anytime we get a big time move in the markets, I step back from 10,000 feet and I take a good look. I take a good look at what's going on. So what's happening? Getting the buyback. All of a sudden that yen strength is toast. We're above that 38%. I talked a lot about that 148 level. We're above that. It's bullish. Bullish, bullish, bullish. I mean, it really is. So I'd be looking to get long here really any way you could. Do we have anything on the daily? Potentially, we got a swing high to set up here. Let's go down to a 30-minute chart and see what we have. Yeah, I mean, this would be something I would look to buy probably early next week if you get an opportunity shortly after the Tokyo Open. Keep an eye on the yen, see where it opens. Right from the bottom of that NFP move to the top of today's move, you've got that monthly moving average right there at about that monthly 38% at right around 148. I would love a pullback bid from down there. That'd be fantastic. Maybe we'll get it for the U.S. session, but I'm officially bullish again, U.S. dollar, Japanese yen, as the jobs market really did pick up and looks pretty darn good. All right, everybody, I'm going to go ahead and sign off. It's been a long day. Been on this stick since about 4:30 this morning, so I'm going to go ahead and kick it. We put out a trade idea, a couple trade ideas out for you. We got silver next week. Remember, Connor, the powerful Connor Woods, is going to be out of the office, so I'm going to be doing double duty. Check your stream schedule, because it's going to be different. It's going to be different pretty much every day. Times are going to be different. We're going to trade the U.S. Open some days. We're going to do mid-session briefs some days. Other days we're going to do some Asia-Pacific previews, but I'll be on twice a day no matter what. We'll also have CPI live for you on Thursday. So a lot going on next week. I'm pulling double duty. Connor's out, and he's out, I believe, until next Tuesday, the following Tuesday. Be sure to check out our YouTube channel. We've got a new video out on Beat the Market Maker strategy, and that's about it from here. All right, everybody, I hope you had a great day of trading. Today, I'll be honest with you, it was kind of clunky at times. Couldn't really get the moves I wanted. I missed a real great trade in gold. I don't like missing trades. It spoils my day. That last trade on WTI crude, I probably could have done a better job for you guys. I mean, right now it's trading down to about 75.33, so you can see that top range number was money in the bank, but that's okay. That's life. That's the way it goes. Nobody's perfect. Remember, your own situation is going to dictate what you need to do. And I knew going into that trade, I wasn't going to let it eat my lunch. It wasn't going to happen. Couldn't do it. No way I'm taking a big risk last thing on a Friday and going home and wiping out a week's worth of work. That's just my own psychology. Why? Because there's more Monday. And then Tuesday, Wednesday, Thursday next week, we're going to do very well. All right, everybody, trade the action well, and we'll talk soon. See you.